What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intermarket analysis. Yes, my setup looks a little bit different. We spent over $10 billion to create this studio on the top of a New York skyscraper. Nope, I'm actually here to let you know that the format's not changing of the show here on YouTube, but I am streaming live on Twitch. So if you look at the pinned comment, you can follow me there and get notified when I go live. I do plan on bringing my live show to YouTube, but I'm just trying to get used to doing lives and see where I want to take it before doing so. We got a very short and compact episode today. Let's go ahead and get into today's show. All right, people, welcome back to the show. Make sure to check the pinned comment if you haven't done so already. Once you do, you can download today's chart deck and also find more information about the swing trading community here. That's all we're going to spend on that. Today, we did get some interesting data and a bond action. Better than expected PMI flash numbers. And what happened to the Fed watch tool? They are pricing the probabilities of, well, pricing out the rate cut expectations. Now it's more than a coin toss that we're actually going to keep rates higher for longer. So it's going to be interesting to see. We're still looking at 1, 2, 3, 4, 5, 6 rate cuts, but the market's starting to adjust to that, especially after we get this type of macro data. What did the 10-year yield do? Well, the 10-year yield started down low, but it finished about at the high of the day, kind of continuing to move and drift a little bit higher. And then if you look at the yield curves, they started steepening a little bit further, right? Minus 16 basis points inverted, 126 basis points inverted in the 10-3, but it has been kind of steadily steepening here, which we've seen and we talked about in the prior episode, that it's not always the greatest for the markets. If we take a look at the 11 sectors that make up the S&P 500, energy made a big comeback. That could be because it has a very strong correlation to the 10-year yield. And then also, if you look at terms of oil and what's going on in China, this could all be well correlated where we can potentially see a little bounce in oil and potentially energy stocks, which we saw today. So we'll see if we can get some continued follow through. And then tech started the day very strong, but it did sell off from its highs. If you look towards the bottom of the list, utilities is a heavily, it's more of a risk off sector, right? But it's also very rate sensitive. And there was quite a bit of volatility within the rates today, within yields. And if you take a look over here at the indices, you can see rather flat for the entire day, right? So Dow Jones is rather flat, S&P was flat, NASDAQ was relatively flat, but some of these were up quite high to start with. And then small caps, I mean, on IWM, we were up, over 1% on the day, and it completely reversed on itself for the second time now, for the second trading day. We had Tesla report after the bell. Tomorrow we have American Airlines and Xterra, Alaska. So a lot of the airlines are going to be reporting. We talked yesterday about the divergence between transports and the Dow Jones Industrials. So if you want to go back and kind of listen to that, go ahead and watch that. So it'll be important to see how these how they report and how the market responds to that. Then after the bell, we got Intel, Visa. So nothing too crazy there. The big one was Tesla. And if you look at what happened with Tesla after the bell, it is sinking off. So we'll see where it opens up. The expected move was plus or minus about $16 at the close. It was very similar towards, the beginning of the day too as well, but we close here. And this was the earnings expected move, and we haven't came down to tag that level yet. So we'll see if we do come either the pre-market session or even in the open. Now, going into tomorrow, an hour before the market opens up, we have durable goods, GDP growth rate, and then we have some other interesting data that's coming out too as well. Towards, more midday, take a look at the various bond auctions, or bill auctions. So we have at 8:30, 4-week, 8-week, and then we have a 7-year note auction. So just be aware of the times of these if you are trading intraday, because we have seen some pretty strong volatility come in when we get those numbers. Now, the big level that you want to watch here is going to be 4,900. That's that call wall that we've been discussing. We got about outside of it a little bit today, and even on today's live stream when we started pumping through it, the likelihood of it pulling back within and, kind of being within this area was very high. So if you knew this level, this would not be an area to really chase. If you really want to start breaking, we need to see much more kind of like movement outside of it to really flip the script and start, pushing severely from that level. But market came right back in. Coming into tomorrow, local resistance is still going to be that 4,900. Ignore that 0-date thing. That was also a 0-date level. And then we have local support at 4,860, but that's not really a strong level there. We'll see what it looks like come tomorrow, but we do have 4,850. That could be a stronger level to pay attention to. And we're still in that positive gamma territory. Yesterday, we showed this chart of some levels of liquidity to pay attention to, as well as those daily expected moves for ES. I just wanted to update you on this. So this was at 49.20, and what happened? Well, we came up into 49.20, was right here, and that's where we absorbed all that liquidity, right? And then we started pushing back down from that level. Coming into tomorrow, we have an expected move of 49.25, and then below us at about 48.77. And there are two, once again, interesting levels of liquidity, okay? 49.45. So if price wants to come swing up this way, just be aware of that level. But if price wants to start sinking to the downside, this level has been here too for the entire trading day, and that's 600 contracts, so pretty sizable level right there, just at about 48.65, give or take a few dollars. So that would be the level to watch there. The SPY did bounce up into the upper portion of this channel, and we started reversing on its face to close really at the end, at the low of day, right around that level. So to see this pull back a little bit, yeah, it might be scary if you're looking intraday, but it is still, once again, within a overall up channel and above that year-to-date anchored VWAP and above a rising 5-day moving average and in positive gamma territory, which once again, if you don't know what that means, it means dealers look to buy the dip, sell the rip, okay? If we take a look at the SPY on the 15-minute time frame, we did come into the weekly expected move, got outside of it, but we pushed right back within. Coming into tomorrow, 488 to the upside, 482 to the downside, still above that rising 5-day moving average. And if you take a look at the price action, it wasn't all that severe. Basically, what I'm looking at here is that we came down, right? We broke out, took a little bit, came down, and we found some support at this gap fill. So if we start closing that gap, it could be an exhaustion gap, or if we gap down tomorrow, you might look at this and say, hey, it's a possible island reversal type pattern, which opens the door to come to that lower daily expected move and then test the inclining 5-day moving average. If we start breaking out, I'd say just pay attention to this little trend line here. If I actually anchored a VWAP to here, it actually is right around the same level. I just didn't do it on this specific chart. But as it stands right now, we're just within what the market anticipated as his risk, and everything looks to me like it's totally fine. That's all I got for you on today's episode, everybody. Be careful, be safe out there, and I'll see you tomorrow.